Eelco, welcome to the webcast. And maybe just to kick things off, can you share with us a quick overview of the GRI Standards?
Yeah, thank you for having me. No problem at all. So GRI has been founded in 1997 in the United States before it moved to Europe. And GRI is the oldest, most used sustainable standard setter in the world. More than 11,000 multinationals use our standards. And what makes GRI special as sustainability standard setter is that its principles are based on the so-called double materiality principle, which means that it's not only about the enterprise value creation itself, but also by a company's impact on climate and society, so to speak. We have been very proud to have been reached out to by EFRAG, which is the European Financial Reporting Advisory Group. A long thing for something that basically is the official institute to set the sustainability standards, the mandatory sustainability standards within the EU on ESG reporting, which will be also based on this so-called double materiality principle, and we can go into that. And we agreed upon a so-called co-creation agreement with the EU to support them in setting the standards that are already widely in use.
So then, Eelco, does that mean that the GRI standards as they exist now are what EFRAG is going to adopt, or you'll be making changes as part of this process?
There will, I think, be some changes, but I think the most important thing is that it is very clear that the EU will go for this double materiality. And let me explain that. So we have the IFRS Foundation and SASB, which will be incorporated in the house of IFRS, which is a very good thing, which we are very supportive of. It's a great breakthrough that within international accounting standards, ESG is also being taken on board. But it is about so-called financial materiality. These are standards that are about the value creation or destruction at the level of the reporting entity on behalf of its investors. Very important. That is more or less what you could say an outside-in approach. What are the monetary effects of climate change, of socio-economic upheavals upon the value of an organization? Then you have EFRAG, GRI, which is a more inside-out approach, which says, okay, that is very important, but also what are the effects of the value change, of the supply chains operations of businesses on climate and on the socio-economic cohesion of society. And both are needed in order to create a sustainable reporting landscape, both for investors as well as society. And that's why we are so excited that at the same time, these initiatives more or less get aligned. So great progress has been made last year.
So then, Eelco, I think for many of our listeners, they're listening and thinking, okay, but this is all in Europe. I'm a US company. So why should I care about these different developments?
Well, first, of course, because everyone wants to do good. We know we have issues on the planet when it comes to global warming, floodings, fires, etc. We know there are some social aspects around diversity, inclusion, equal pay, child labor, human rights, etc., 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 that most companies want to solve. They want to be a part of a solution for the greater good of the planet. So the intrinsic drive to do something like this goes beyond what is your legal minimum requirement when it comes to these topics. And we see so many large businesses and also very large US businesses that voluntarily embrace to report on this and take these matters serious. But assume you are a climate skeptic or have a different view on life or policies, which is perfectly fair. Thank God we live in democracies. So then why should you take notice of things like this? Well, the threshold in Europe to the mandatory reporting under the so-called corporate sustainability disclosure, corporate sustainability disclosure directive.
Yes.
I was missing the D of directive. The threshold is quite low. So if you have operations in Europe and you meet two of the following three criteria, you need to mandatory report on these topics. And the threshold is 250 FTEs, 40 million revenue, or 20 million of assets, which in Germany they would call a small medium enterprise. I mean, it's quite small. Two of those criteria you need to meet, and you should file those reports. And what is interesting, of course, is that those reports require limited assurance by an external auditor. So in order to avoid greenwashing and stuff like that. But legal or not legal, the intrinsic drive to start to report, to communicate with more stakeholders than just investors, think about your own personnel, your staff, your suppliers, your clients, the communities you operate in, and so forth, is a great value increaser for your business and the credibility of your organization.
All right, so Eelco, many more questions for you, and we do cover those in the podcast for a podcast that we did for people who want to hear more from Eelco. But maybe final question for you. So your current role is PwC partner, and I'm a little biased. I think that's a good job, but you are leaving to go be the CEO of GRI. And what led you to find it important enough to make that change?
The reason why I made that change is that I think I will be able to contribute even more to the purpose that GRI has, and that, by the way, also the IFRS had, and that is coming to an aligned infrastructure.
Well, and as you know, we're already planning to have you back on the podcast or the webcast once you're in your new role, because definitely looking forward to hearing about all you've accomplished. So Eelco, always a pleasure to talk to you, and thanks so much for joining me today.
Thank you very much, and stay safe. Bye-bye.
Bye.